A very good evening to all our mentorship traders. We are on the 25th of June 2021, 9 p.m. Indian Standard Time, a Friday evening. Like always, our mentorship invest session, the first few minutes, we talk about the markets, the index, few sectors, and then we move ahead to talk about medium to long-term trading bets. So, on the verge of a new life high, yet again, from the Nifty futures. This is the daily chart of the benchmark Nifty. We had a sharp, short-lived sell-off, equally sharp bounce back. The expiry was fairly muted, and a fresh day to a fresh expiry today towards the July contracts, and we have a nice, close to a 97 points gain in today's trade, very close to the life high. The underlying trend stays up. Momentum stays a little on the lower side, but still no complaints, but it's resilient. We've seen stocks like Maruti bouncing back as if there's no tomorrow. And we've seen a beautiful sectoral rotation happening, which clearly supported the index. It's a clear signal that we got from this recent dip down and equal bounce back that the market's not ready to give us a complex correction. We've been talking about the fact that throughout this bounce back, we've seen corrections in the order of just a couple of days, and it was never two-legged. Two-legged correction generally looks like this. So it seems like this time also the market has no intention to allow a two-legged correction. In fact, it all looks nice and well placed for the index to hit further upsides. Short-term supports come in close to the 3-day low, which is close to the 15,670, 15,650 mark for the Nifty futures. Upsides, when you're at a new life high, it's very difficult to predict how far can you go. But we had some levels drawn with the help of Fibonacci before, and we know 16,500, 700 is a level we can work with. The long-term charts, this is the monthly chart. A few more days to go for the month to end. Nice and easy, holding well. Weekly charts will show the bounce back that we had this week. This is the bounce back that we had. No issues there. So far, so good. We did take a look at the daily chart. Now, this is a 75-minute time frame, which will give you a sense of an ascending triangular formation on the short-term charts of the Nifty futures. Nothing much to take away from this pattern, apart from the fact that we can expect a breakout. It's got some decent support, as you can see here, 700 and further down. So we should not question the underlying trend. We should not try to pick the top. Even if we manage to do so, that we've been trying over the last couple of weeks, that, okay, there are divergences. Okay, there's an evening star. Remember this phase of the market when we were extra cautious. It did play off. It did pay off also for us. But remember, on the short side, if you're taking any positions, make sure your trades are short-lived. You don't hold on to your short positions for a longer period of time. Bank Nifty did well. In fact, over the last 2 days, as I was sharing my views on the market with everyone with the help of our warm-up email, I've been mentioning that banks and finance needs to pick up, especially banks, and within banks, especially the private sector banks. Though we got some good move coming in from SBI and Bank of Baroda, but yes, Axis Bank, ICICI Bank definitely did move well, and going forward, they will continue to outperform. So financial stocks, banking stocks, I think will contribute more. We had a close to a 2% move from the Bank Nifty index today. 36,500 is the level to work with on the upside. This movement can take us up here, which is close to very important resistances. So stay bullish on the banks for sure. The Bank Nifty weekly charts, or I believe it was the monthly charts, yes. The Bank Nifty monthly charts will clearly show you how it is inching close to an important parallel channel border on the upside. So this is close to that 37,000 mark. And over here, we are working with a target of around 36,600. So as the index tries to follow the Nifty to a new life high, I think it is probably likely to face a bit of resistance. But having said this, with today's move, it has given the first indication that it is headed for its previous swing high and maybe more. We should not again question this. It's got some good contribution coming in from the highly weighted stocks. We've got SBI, we've got Axis and ICICI Bank. The weakling is something like a Kotak Bank. It's a bounce back candidate. I wouldn't suggest you to look into it right now from a trading perspective, but keep a closer look at iBank, Axis, and definitely ICICI Bank. Auto did well thanks to Maruti. It was like a typical V reversal move, and with enough huge amount of momentum supporting that move, that auto index did move pretty well. Should continue. There's as such no technical signs of worry on the daily time frame. The weekly time frame is dealing with some real old time resistances, supports, resistances. So it's actually dealing with this level, but it's not a double top. I do not sense that it will give us a sense of that anytime soon, of a double top. So it's taking its time. It's getting some support coming in from stocks like Maruti and Tata Motors. Tata Motors can definitely play a role. I can take a look at Tata Motors for you right away. These are all futures charts which I track, analyze, and trade. So Tata Motors is also on the verge of a breakout. It did face a little bit of slide in today's trade from the intraday highs of 345. So 345 is your immediate breakout from the stock. Maruti, we know how it moved. It's exceptional. Apart from that, amongst the two-wheelers, if you take a look at Hero MotoCo, it's underperforming. It's got a divergence kicking in down here. It's got some kind of a bullish engulfing kind of a setup. So it can try to bounce back, but it's in a downtrend. It's in a weak phase. Bajaj Auto is relatively better off, but it never picked up from this low. If it slips, then this can lead to a two-legged correction, something that we discussed while talking about the Nifty. In that case, you're looking for a level close to that 3,900 mark on the downside. But if this low holds, then we might get a move. But I think that it's the four-wheelers which has an edge. It is the auto ancillaries which has an edge compared to the two-wheelers. Bharat Forge is holding well as a verge of a breakout. We can keep a close eye at Bosch. Very good long-term portfolio counter. Not that liquid in the futures market, but a beautiful doji. You can also call it a bullish harami pattern. Also, it's at supports previous lows from where it bounced back. So this can be a short-term play. So there are some odd stocks within the auto which can continue to support the market. We spoke about the Bank Nifty and the finance, almost 35% weightage from the markets. FMCG, thanks to Hindustan Unilever, did perform well. Now it's coming off. What can we expect from ITC? It's, you can guess it's at 200. So it's not going to be a wrong guess. So FMCG, I think, will cool off a little bit, then can perform. IT, yes, continues to surprise us, continues to show the kind of strength it has. Amongst the IT stocks, let's quickly take a look at, let's first take a look at the biggies. Infosys, exceptional move. This is the daily chart. I'm going to quickly change it to the weekly. Strong move, higher highs, higher lows, no sign of worry. So you should not be questioning the underlying trend. Look to buy on dips. HCL Tech, relatively more volatile than Infosys, still in an uptrend, doing good. TCS, again, big move that came in from the stock yesterday. Today consolidated, but there are no technical rationale or logic to question these moves or say that, okay, we will look to sell. Looks strong. Tech Mahindra, I would suggest, is the most volatile amongst these four. Again, a stock which can surprise us on the upside once it takes out that 1080, 1090 mark. Coforge, beautiful cash portfolio counter, beautiful trend on the upside. So these guys will, I think, continue to hold on to its upsides. They have not created any strong evidence that they might correct. There might be some short-term divergences in the intraday charts, but apart from that, IT, I think, will kick in every time the market needs it. Whenever the market decides to slow down, I think my IT will kick in. One important sector and stock I would like to talk about today, That is energy, and within energy, amongst the top stocks that I have over here, Reliance Industries. Biggest weakling in today's trade as well as overall markets over the last 3 to 4 trading sessions. Decisions to spend here and there over a little bit of energy, hydrogen here, there, so might have not gone well with the market. Nevertheless, what can we expect? First, let's understand where is it. It's in a trading zone. It's stuck in a zone. I have this red zone, which has been acting as a resistance. Over here, I have some supports drawn. I have the volume profile also. So let me break this down, because this is an important stock, and it always comes in when the index needs support. At one point of time in today's trade, almost 50% of the weakness was coming in from this counter only. So let's try and break it down for us. Reliance is very likely to stay within this range. Now, if you look at the behavior of Reliance from this point onwards, that is after its big trending zone that it actually reversed, thrice it has managed to reverse its moving averages. This was one crossover, this was the second crossover, and this was the recent third crossover. I mean, the moving averages crossing over its medium-term and long-term moving averages. This was extremely short-lived because the movement was extremely sharp, the way it went up, the way it came down. This lasted for a few days. So if I quickly draw an info line, this crossover lasted for around 18 bars, which is on 18 days, close to a month's time, and it gave us close to 14%, 13.29, so 13 to 14% rally for the stock. This guy, on the other hand, is around 13 days, and it gave us also close to 15%, 14.75. So both the crossovers as of now has given similar kind of a return. The stock is clearly stuck in a range. Sharp sell-off, intraday charts will be oversold with divergences, and they can give you some bounce back. What if it continues to weaken further? Then few levels that we should keep in mind, close to 2060 and then 2020. I think 2020, 2060, 2070, this kind of a zone, if we get some kind of a soft landing and if we get some kind of a divergence kicking in, might give us a better opportunity. Short-term traders should not try to attempt to buy into Reliance just because it is Reliance and it has come down. Yes, intraday charts might give you some opportunities. I don't have an opportunity here on the 75-minute chart either. It's gone into a downtrend, so stay careful. This guy can come down. I'm definite that this will come down further, and that will weaken the overall oil and gas space as well as a little bit to the Nifty. But overall, maintain your bullish bias. Look to buy on the dips, chase breakouts where you are going to do some short-term trades. No need to predict the top. There's no requirement to be extra smart and try to pick the top and go contra unless there is enough evidence to do so. It's better and it's always smarter and prudent to stay with the underlying trend. All right. So with this, let me wrap up the call on the index and the sectors. Let's straight away now go ahead and discuss the stocks we can focus on the coming week.